core inflation easing for the fourth month in a row. So what does this essentially mean for the Fed's next move? Here with that is our very own Jennifer Schonberger. Hi, Jen.
Good morning, Shauna. This morning's CPI report offers the Federal Reserve the progress they want to see on inflation, giving the central bank more good data to cut rates in September. Here are three things that we learned from this morning's report. Number one, overall, we saw continued good progress on inflation on both a core and non-core basis, continuing that downward trend that started in the second quarter. Overall, CPI in July rose 2.9%. And on a core basis, excluding volatile food and energy prices, rose 3.2%. The latest reading represented the smallest annual increase since March 2021. Inflation is now rising at 3.2% compared with 3.3% in June, 3.4% in May, and 3.6% in April. So really seeing that downward trend over the second quarter. Now, number two, components of inflation are coming down at a slower pace. If you dig in deeper to this report, we saw more of a mixed bag. Shelter continues to be a factor, namely rent. Owner's equivalent rent was up 5.3%. The primary residence prices were higher by 5.1%, though we know that rent CPI data lags the real numbers, which are trending lower. Now, on the flip side, services minus shelter, a key measure that the Fed looks at, that declined. We also saw reductions in used car prices, medical care services, airlines, and clothing. So perhaps a little bit of pressure there on the consumer. Now, because of the progress on inflation, this report gives the Federal Reserve the green light to cut rates in September. Recall Fed Chair Powell said during his press conference in July that, quote, more good data would cause us to gain more confidence. It's just a question of seeing more good data. So, guys, the question isn't, will the Fed cut in September? Won't the Fed cut in September? The question is by how much? 25 basis points or 50 basis points? And the determining factor for that is likely to be the employment report out in September. Back to you.